Coming out of a strong bounce that could be getting stronger, will Gary's outlook for a strong finish into the year end come to fruition? If so, where should we be looking to invest our funds and find the best trades? They're the questions we're putting to Gary Glover this morning. How are you, Gary?
Yeah, I'm great, Chris.
So you have been talking for a couple of weeks, the possibility of looking at the cycles, particularly the US markets, and seeing that there could be a strong rise in towards the end of the year, the Christmas New Year's period, what some people call a Santa rally, a Christmas rally. And we've had a good jolt on the US markets up until trading today on Tuesday. Monday gave us a very strong move on the Aussie market. So how are you seeing that moving as we're sitting at the 5th of December and looking down the barrel towards the year end?
You know, I think I sort of said last week, Chris, I was expecting maybe like a little pause for a week or two. But then when I had a look, reviewed sort of all sort of previous sort of like pennant sort of, these sort of sideways oriented sort of corrections and then breaking out under highs there. What I saw them probably 80% of the time there was only like a 3 or 4 day pause under the high and then kick on. So there wasn't the sort of pause what you naturally think. Because I sort of think, I was thinking, oh, look, we'd love to see that little David Ryan congest under the high for a few weeks and then pop through. But you look sort of historically there, I think about 3 or 4 days was what I sort of generally saw from the pause. I thought, oh, well, this might only have a little pause for a few days and then punch through. So I think the Dow's already punched through pretty strongly. The Nasdaq's had, I think, 1, 2, 3 days down here from the high here. So that may be another day here, and then the S&P is, I think, it's got a new high there. It's sort of just hovering again, just under the high there. So this stage really only sort of 1 day under the high 2 days ago. So, so we might only get just a little pause here. That's what sort of history, has indicated happens around 80% of the time. But maybe you'll get a little David Ryan, 2 or 3 week pause. But I think it's really rallied pretty hard here. What normally happens, I think I said last week, normally rallies pretty hard up to the high, few days on its side there, and then it sort of punches through, but it doesn't sort of take off. It more grind. It does a really sort of slow grind high from here. Yeah, so you get your fat. So sometimes you see that fast move out of the gates, and then it just sort of climbs more on an angle. So I expect sort of something like that. Yeah, as you've indicated. So I think once it pops through here, I think it'll probably just grind higher there, and that just means that you'll start to see rotation within the market. Other sectors start to peel through. So I still think it looks pretty constructive there.
Just on that for a second, talking about rotations in the markets. For us to get a good, strong, impulsive move on indices like the S&P 500, Dow Jones, Nasdaq, and the Aussie, is it more likely to see if we're getting this very strong, impulsive drive that the leaders in the market, the big heavyweights, are doing a lot of the heavy lifting initially, and then as you're saying that transition, it's a slower grind? Could that be because possibly the leaders aren't running as fast, and then there's a transition of the leaders into possibly a new segment that doesn't have that huge weighting? Is that possible to happen in this scenario?
Yeah, I mean, you generally sort of see obviously the big caps, take off first, sort of then the leaders. Then you sort of start to see some of the mid caps get involved later on, and then you sort of see some of the smalls, come in late there. That's kind of like the normal sort of cycle. But if you think about the leadership groups and stuff as well, like sort of momentum sort of stocks as well, sometimes you see, like, you watch sort of Minervini and those guys over time there, they probably don't get involved in the first 3 or 4 weeks off the low. They sort of wait for the whole setup start to, all the congestion setups there, and then they get involved there. So that can actually run through. That can actually run through past the market top as well. So let's just say this was just going to go through to January. They probably wouldn't get involved for the first 3 or 4 weeks. They're getting involved later. Maybe the market's not accelerating as much, but the individual stocks are having little rotations and little breakouts and having little runs there. So there's probably some better setups technically for the individual stocks here to sort of break out and run, kind of later on. And they can actually run past the peak as well. So just say we peaked in January, they might run all the way through to February before, because again, the leaders will probably start to, lead on the way down, and then second tiers will sort of follow later on, and then the small there. So I think I saw the, what's his name, Jeffrey Hirsch there's got the seasonal there. So I think small caps are sort of in that window now from around, I think might be late November is sort of their sort of window to sort of perform best seasonally. So they sort of tend to sort of start later than other sectors here. So you might actually see some sort of small cap rally here from last month until the year.
Well, it's good to know coming into that we can have those transitions in different segments within the market. You did mention the Dow Jones, so we'll jump to that in a second. But the next one in your report, your weekly report, is the ASX, the XJO, it's top 200. We're well and truly off those highs, as your red box at the top here indicates. Can we follow? Is that possible? Do we need to see more transition? What are you looking at on the Aussie when you see what we're seeing here?
I thought it looked quite good actually at the end of the week there, because really it had sort of 3 weeks up, sort of 2 on its side here. So some reasonable volumes in there, as much as we're underperforming the US there. Obviously had a bit of a jump yesterday, kind of a bit of a pullback here, a bit of a pullback here today. But I still think this will climb here. It's just, as I sort of said to you, I think I'm probably not seeing sort of new highs here for our market, maybe just a retest of that 7,400. So we are a little bit underwhelming so far. So maybe we'll remain that way, but I still think we'll sort of grind it higher here. So I still think we can probably get to 7,400 by the end of the year, or maybe the first week of January, something. But I guess we haven't been the strongest market here so far. So if you're a momentum trader trading indices there, we might be down the ranking a little bit at the moment. So we wouldn't be in the A's anyway. So
Right. Well, the Dow Jones, you did say that looked like it had a strong week. It has broken out above that high that you were talking about, and it's got 4 very strong weeks and a 5th minor week, but 5 back-to-back that have been the rise, and that's what you were talking about earlier, isn't it?
Yeah, so it's been really strong here. So basically bounced straight back through that sort of trend line, which I think is really significant. So that's quite positive to sort of break back above that. And now we're really just within touching distance of the old high, Chris. So that, to me, that looks like a formality here. So maybe we talked about how, this sort of the October midterm year to the end of the following year, which is the pre-election year, which is this year, average gain historically for that 4-year cycle is around 49% for the Dow. That's a massive gain, historically sort of average. So we're obviously not going to go near that this year, but maybe this is going to push a little further than we were thinking there a month or 2 ago, when it was probably underwhelming. So maybe we can break above 37,000 here and get a little high there. So not sure what percentage return now might bring the average down to every 4 years or stuff there, but still end up might being a half decent return here by the end of December.
Well, that's a good point to then have a look at the next layer down. You've covered the indices. We've got an idea, an overview of where the market can go, what historically the Dow Jones can do. If we look at the trading shares now, we're starting off with Ramelius, RMS being the ticker. You've got a few bullish spacing comments in here, and then you've also got sort of some congestions, wedges, and then some breakouts. And then what's this one here? What do you call that pattern there?
Yeah, look, we just sort of really pulled back, set on top of the high, and still leave it in a position to sort of go to a new high there. So, so still, I guess what we're seeing there is really sort of good breadth on the way up. And then when it pulls back, we'll see the volume dry up as well, each sort of correction there. So, I guess what we sort of highlighted there, Chris, is in October too, is that, gold was probably the leading sector when the market was in a low in October. So that was sort of telling us that that's a pretty strong sector. It's probably one of the, it was holding up the best, showing relative strength there. And as a result of that, that's been definitely been a leading theme here in recent weeks here as well. So, been pretty robust there. So yeah, I think this sort of gets to a new high. I think it tagged the old high there yesterday, so it's going to be obviously down here today. I think gold's come back here, but stocks are probably underperforming the spot gold. I know people are sort of saying typically the gold stocks can rally later, even though even where sort of gold tops. I think I'm not sure it was Barry Dawes or someone like that. I was talking about the actual individual stocks. The stocks can sort of lag the commodity sometimes. So when a commodity like pop, and that maybe congestion or be correct, stocks might sort of hit them, might climb sort of later. So even though we're sort of caught off bit today here, I still think gold's probably not sort of finished here yet, but we'll see here. Look, I did sort of sell, I mentioned here, I sold about 40% of my golds yesterday just into that heat. Kind of, I think, when it's the market's popping there, you got to definitely sell some into that because you'll always get little pullbacks. And but yeah, we had a decent pullback today, which is a bit of a worry, a little bit. But let's see how it finishes today. You might sort of see, I guess, they may well get supported by in the second half of the day here. So, but yeah, the golds are looking pretty decent. Yeah, they've had a pretty good breakaway, pretty good worded there. So can't see anything too negative there. But as we know, Chris, we'll definitely get little pullbacks, little congestions along the way here. So yeah, and that look at the RSG there. It was really, it's funny how it sort of held that 50-week there. Really tight action there. It's probably actually, I was getting a bit frustrated with this one there because I sort of think, I guess everything else is starting to pop here, and RSG hadn't, and then and then eventually it does sort of take off there. Kind of the damn well breaks and then it pops through. So the good thing about that's the volume's been pretty good as well. The pullback, the volumes are pretty light. So the overall construction, the trend is still pretty robust there.
So just on that timing, I know this is something that you and I have discussed a fair few times off air about how a theme can move, and you're talking about sort of that frustration when you're seeing this coiling, very compressed, sitting on the 50-day moving average. At the same time, throughout this October-November period, you're seeing other gold shares rally. While you're holding here sort of held back and sort of been left behind. But that's something that we've looked at a couple of times and seen, well, actually, they don't necessarily all break out in the same day or the same week, do they? They can actually be a little bit spaced out, which is possibly what Barry Dawes is talking about as well, is it? Where you can have a leading theme, but actually not all congested in the 1 week for a breakout.
Yeah, I guess we did see that a bit, Chris, when they were taking off there. I think that in October there, when the first sort of pretty much around the low, we had a lot of the leaders breaking out. And then second week we had the second group breaking out, and I think for 4 weeks there we had a group of gold stocks in that in the weekly momentum list as well. So that's pretty handy. Pretty much 4 weeks back to back there, we saw a handful of gold stocks in the leading group each week. So, and look, to be honest with us, sort of we've been learning this, with a 30-30 report there now. I'm learning that once you sort of see a sector, show wide appeal there and wide strength, and then start to lead there, that's usually a good indicator of down the track, So probably one of the first times there now that I'm sort of been following your report for a couple of years now, so I'm actually really starting to trust it a lot more than I used to. So I've probably had around 45% of my portfolio in gold, so as a result of that, seeing that strength in October push through and the rest of it. So, but again, you got to trade some of the heat here. That's what you got to do. When they really kick on pretty strong there, they get near the old high or even just above or just below there. You got to trade some there, sort of, because oftentimes they'll get to the high, maybe congest under it and push later on. So, but yeah, the gold's given us all the right signals here again. So, the coming months, hopefully we'll get a sector which lights up like similar again, and we'll be able to, go again.
Nice. Well, we'll definitely look for that. But progressing through your report this week, you've got a few other companies, different sectors and segments of the market as well. You've got Mirvac as the next one in here. Now, what's happening here? We've got it's come down, sort of retest, but undercut the low. So is that a false break that you're looking for? Marginal new low, possible margin new high?
Yeah, got two false breaks there, Chris. So I thought I'd just a couple of yeah, in this sort of market there, we've definitely seen that sort of theme here, reoccur over and over again. We've seen them, market come back to new highs and new lows and stuff there quite regularly. So MGR's come back down the low, had a nice little bounce, adjusted line volume, bit of recovery there last week, some good volume there. So that's sort of showing, good signs there. And yeah, just some good volume there as well. So oftentimes we go to a marginal new low and we're expecting it to go back up to like marginal new high there. So pretty good risk reward sort of set up in there. So any sort of tightening up, any little sort of VCP, little tightening sort of set up in there, it's probably worth keeping an eye on as well. I mean, AG Milk's sort of done something similar. AG Milk's probably a bit less impressive because that's probably a bit nastier of a downtrend. So they're 7 down to sort of 4 here. So pretty big percentage gain here, but has come back and retested the low here. I remember seeing something like in the S&P 500s have done this a couple of times on the highs, well on the lows and stuff there. At the time there you think, well, yeah, it looks pretty scary, but it's funny how they sort of work out there. So we did see a bit of volume come in first week off the low, but then it sort of pulled back, showed a little bit of weakness the last couple of weeks, but the volumes have dried up. So it's not sort of following through here. It's kind of more sort of squaring up here. So I don't mind this, Chris, just because the risk reward is exceptional. So, the risk reward tells me this is, potential got big upside here. And if you're wrong here, it's pretty small. So probably just need a small position. So you're not risking much. And then if this one runs here, then it could be a pretty decent move here. So, possibly sort of Australian-China relations here. That's obviously getting mended here. So I don't know whether that's relevant or not for HU Milk and whether that's possibility here as to, an upside there. But it has come back to a pretty key level, the old low there.
That definitely does look like a nice risk-reward trade. Entering 387, stop 367, 20 odd cents. And it's just a little under a possible 100% gain if it goes back north of $7. So
yeah, even just going back to the 50-week moving averages, that's probably still pretty handy risk reward as well. So but no, it looks
see how it pans out.
Yeah, it looks pretty decent. So yeah.
Now South 32, you talked a little bit about this one off air, talking about diversity across the different minerals and metals that they're pulling out of the ground, different exposures, different commodity or market forces driving those individual metals. But he had some really interesting insights into what's going on here, and apologise to ask you to repeat that, but we did have a great conversation before air. So what's catching your eye in this South 32 mining space right now, given that this is kind of the opposite to those momentum shares and the golds that you've been doing so well with?
Yeah, so golds and iron ore, obviously they're on fire at the moment. Obviously oil, lithium, and probably just the sort of diversified miners, they're all under the hammer as well. So S32, I think IGO is the other one that I'm sort of watching closely there. So this is a big level here. That's sort of 61.8 on the weekly. So there's a big technical zone in there. It has sort of slowed down. So it's bounced a couple of times off this sort of 305 zone. And the volumes are up here on the daily as well. So, still a bit early here. Don't like to sort of catch a falling knife and stuff here. But it is showing a little bit of something there. So it's a bit of a key level for this stock here. The larger ABC there, that's kind of the measured move in the red there from the first leg down. So that could go slightly lower there, but I just find that this is pretty big. It's a pretty big correction here. So to have like a 61.8 on the weekly there, it's just a large pullback there considering what's going on there. So the copper price has actually been heading up quite nicely the last month there. So so some of the other metals actually doing okay here, but share prices are under the pump here. So S32 has come back to the 61.8. IGO has come back to the 61.8 today as well on the weekly. I've got a nice little timing, some little Gann cycles I look at as well. So the same low that made the ResMed low is coming up for IGO today. So just probably worth keeping an eye on IGO at the moment here. It's sort of it's one that I think is pretty deep as well. But if for some reason those stocks are really out of favour here, I think they're pretty interesting sort of key levels there.
Well, that's definitely a really interesting one to watch. And those cycles, for those who are newer to watching, that's a lot of what Gary used throughout the last couple of years, his research into cycles to really pinpoint the highs and the lows that he did magnificently well throughout 2020, 2021, 2022. That was exceptional trading. I'll back catalogue there on YouTube. But we'll move on to the next one, Flight Centre, FLT. So you've got
You got to be careful with this. Got to be careful with cycles too, Chris, as well. So above, I've done all the weapon cycles, and then you can believe your own analysis, and then you can come a cropper as well. So you still got to have risk management in there as well. So I've seen plenty of times where the cycles work absolutely fantastic, and then you get your little bounce there, but they do let you down occasionally. But just got to have risk management, like any good little pattern or any good analysis or any good sort of setup. Risk management 100% all the way through.
Yeah, definitely. That's an absolute essential when trading, because who knows what really can happen. Sidewinders can occur. So Flight Centre FLT, just on the Fibonacci's, I'll quickly describe that. It's got the high here starting at 0, and then the low where it came from 100. And this is talking about the retracement levels. So as the share price pulls back from the high, it kicks through these markers, which are the Fibonacci levels. And that's what Gary's talking about with the 61.8, 38.2, and 50%. So as we look at these blue lines that go horizontally across here, what's the key levels what are the key levels you're seeing for Flight Centre here, Gary?
Yeah, so the Flight Centre has sort of come back pretty close to that 61.8, which is a big correction on the weekly sort of setup there. Has had a bit of a bounce off that level and then sort of come back to retest it. So I know sort of corporate travel is showing it's probably been a bit stronger than Flight Centre. Had a probably stronger bounce and then had a bit of a pause again. But what's jumping out to me there at the moment is the last few weeks pulling back here, there's just no volume. So there's not a lot of selling going on there. So the stock's already sort of had a bit of a reasonable pullback here now. It's probably come back to a reasonable value point up, just sort of coming back there. Still think travel's pretty robust here. Sector going to remain pretty robust, I think. I think anything on the lower side here is pretty good. So any sort of tightening up in here, it's definitely one to sort of keep an eye on there. So I think on those lower regions, I think sort of close to 1750, 1760 there. I think that's probably pretty good entry there for the stock here. So do like that one just for portfolios here, really.
Very good. Well, the next chart is not a share in itself, but spot gold. So if you can just walk us through what you're looking at here on the spot gold chart, I believe that clearly it's done really well. And as you said, you sold into the heat after positioning your portfolio quite heavily in the October period. So why the spot gold chart in this week's report?
Yeah, I've actually got a trading rule around this as well, Chris. Actually, I was just trying to look up my board here to try to find it actually. But essentially they're like, what sort of Gann sort of theorized there was that you can see sort of like markets will sort of, run up and make a high, and then it might pull back, and then they go up and retest it again for a second attempt. The third time you can get a little faster move off the third attempt. But if you go back for a fourth attempt of a high or even a low, basically Gann's theory was don't wait for the break. Fourth attempt is like a 90, it's like a 98%. So really, if you're going back for a fourth attempt of a high or a low, jump in. Don't be afraid to jump in early. Get in and go in. That's when I saw this turn back up here sharply. I thought, this is going back here. This is going to go back for a fourth attempt of the high here. This in the past, we've seen this. We've sort of seen follow through. So I know it has gone to a new high now. So it could fail here potentially. There is actually a couple of cycles in that sort of suggest that might be the case here, but the longer term cycle is still pretty bullish. That's a big cup and handle there, just the last little setup as well. So that's pretty, that pullback is showing that's pretty tight, pretty small as well. So technically it's pretty bullish. I know there's been some pretty crazy moves here that this week here, some big up moves and big down moves there, but it's still pretty bullish technically. So looking at weeklies, monthlies, long term there, pretty strong here, but just interesting that sort of it's a really interesting sort of theory that that the fourth attempt. So oftentimes we sort of see a low, hits a low, bounces there, goes back for a second touch, then your third one have a fast move, but then it heads back down again for a fourth touch. then that
Beware.
be 100% aware. Yeah, you can almost put your shorts on early. So as we sort of put our longs on early here as well. So it looks pretty positive there. So look, probably going to see plenty of volatility there, some big moves up and down there. I think you'll probably see maybe a period of sideways action there. Oftentimes when you punch to a new high there, you might sort of congest for a few weeks around there. So I think you're probably just going to see a bit of a volatile price action there, but you might just sort of see it, might see 2 or 3 weeks of sort of sideways, volatile but sideways action here.
That's a good point, sort of in reference that you said you've sold into some of the heat, especially yesterday, because you were heavily invested in gold for the whole portfolio. You had positioned yourself from this October period, progressively getting more into gold as it revved up, and you've sold well into the heat. But on that, you're saying that it can shoot through, but you're also saying that expect a bit of an expectation, or you're expecting a bit of a congestion here, which fits in with the rationale behind selling into the heat when it may just keep powering. But that's a longer term period that you're talking about, isn't it? Whereas you might sell out today and possibly rebuy tomorrow, next week, or the week after, depending on how it sets up. Is that still on your watch list, all of the gold stocks?
Yeah, look, you'd like to sort of see, a classic sort of, the tight, sidewaysy sort of, low volume action. So if you see some of that there across, we just got to look at it individually there. I guess the only negative is has come off a bit. Most of them actually have come off a bit here today, but as I look here, I can see most of them are actually showing some recovery there. So they've all sort of recovered after sort of the initial profit taking there, which is, I guess, kind of natural after a pretty big move.
Well, so that's a really good insight to have, looking at it on the weekly chart and understanding these scan cycles and how they can, and what your experience has been trading in the past. So to that point, we've got a great insight for the indices, the trading shares for this week, a look in towards the end of the year, and then a breakdown of the gold charts. We say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned the 30/30 report. That's a playlist on the right-hand side where we look at the top 30 momentum companies and the 30 launchpad stocks. That's where this gold came from back in October. And then he's also got trading strategies where he breaks down and talks about other things like cycles. There's a whole playlist on the right. On the left, his Twitter handle if you want to follow Gary there.